Welcome to my channel. I'm Dr. Romano. In today's video, I'm going to walk you through on the best possible route to raise capital for a hedge fund and a funds of funds. I've stumbled upon a good marketing gimmick, and because of my experience in the previous 3 businesses that I opened up, I always focused on what was the best way to gain customers and so forth. Because a hedge fund is just starting, or a trader wants to find capital and establish their own hedge fund with the structure, etc., the first thing you have to create is a track record, and you've probably been trading for at least 5 years. In typical terms, when you look at a hedge fund fact sheet, you look at the past 5 years. The legal terminology, past returns are not an indicator of future returns. Well, unfortunately it is, because you could judge on how well you've done in certain type of market conditions. And that's really important, and that's your edge on raising capital for a hedge fund. But if you are a funds of funds, such as what I'm doing and my focus, you have to select funds that are really good with managing capital in all types of market conditions. And because not all hedge funds are capable of that, you need to create basically a blueprint of all the different type of market conditions, and somehow make sure that your returns are really good in each of those market conditions. Please remember to subscribe to my channel and do thumbs up. It's right there, the button's right there, just press it, because that helps me out a lot. You're gonna get my videos anyway, and that's just how the algorithm works. But if you subscribe to my channel, do thumbs up, that helps me out. Thank you so much. The biggest hurdle in hedge funds and finding investors is that the media has coiled hedge funds to be very risky, very inefficient with producing returns. They tell us that we don't outperform the markets, all this fake nonsense. That's all fake. So for you, the investor, that is all basic marketing that's created so that investors stay at the investment banks as opposed to going to the hedge funds. Now, since you are not a doctor of hedge fund selection like myself, I'm a doctor of financial management and leadership, and I've written over 1,000 pages on research about hedge fund selection and operational due diligence. So if you actually had spoken to me or asked me questions about Sam Bankman's hedge fund, Alameda Capital, you would never have invested in that hedge fund because of a lot of issues that were taking place that shouldn't have. It's really important to have expansive databases of hedge funds, not just focusing on a particular industry. Just because everyone's running into that industry, you don't want to be the first investor in that industry. You need a market collapse to make sure that industry has been fixed based on these worms that happen, that they have improved the government SEC regulation on that industry. And so that's why you should have never invested in that industry. This is just another reason why Warren Buffett, he did tell you, he said he would never invest money in that industry because there's no reason why that goes up and down, whereas an equity portfolio, you have reasons why the stock goes up, the stock goes down, etc. And this is another reason why an investor, you really don't want to focus on directly going for the hedge fund, becoming a hedge fund investor. You want to focus on being a funds of funds investor. So now that you're a trader, so I'm speaking to traders now, and you do have a track record, at least 5 years, you really want to have that 5-year track record before you establish a entity such as an LLC, LP for the hedge funds. Now, when you do that, you need to focus on finding an attorney or a group of attorneys that will give you a really good price. I don't get paid by this company. I've spoken to them, and based on a trader who's starting out, the best place to receive legal advice and allow them to establish your your two LLCs and your LP. The LP is the fund, and the two LLCs, one is the management where you collect the returns, and the other one is the umbrella company. You always want to have the word either capital management or asset management in the company name. It's really important. This way people know what the company is, okay? And also, for those investors out there that are watching this, all a hedge fund company is an investment company. Just like a commercial bank or investment bank, whatever you want to call it. The difference is that a hedge fund manager is an investment company that has one particular specialization. Now the top 10, yeah, they have many specializations, thousands of traders trading for them, so they're copying what the investment bank is doing, and that's why you don't want to focus on large hedge funds. So you want to focus on these young hedge fund managers that have then a $20 million or so capital under management. And so in order for a hedge fund manager to find that capital, in a way, it's kind of like a curse, because the hedge fund manager is going to have expenses. And so in order for that person to establish the fund, they're going to start to have yearly expenses. And in order for them to pay the administrator, the hedge fund accountant, and also office expenses, whatever it is, other expenses that they have, they need a certain amount of capital under management. And yeah, they may know someone who could put $2 million into it, or $5 million, or a group of people, but getting all of those people together to come up with that minimum of $20 million, because remember, the hedge fund has to generate enough returns to pay for the administrator, to pay for the hedge fund accountant, and the other expenses. And so this is why when you say, well, how do I start a hedge fund? Well, you need money behind you. Now, I highly recommend that when you start a hedge fund, you only look for investors, meaning that they sign an investment partnership agreement. They are not a managing partner. You must stay the manager of that fund, the owner of that fund, etc. Don't create partnerships based on having an ownership in the company. You are the only person that should have that ownership, and I'm going to explain why. The mind works differently when you are the owner of that company. And when you are a partner, you have partners that have their own vision, and you don't want to distort your future goals and focus, okay? Now, what you could do is, if they do have money to put up, you give them a discount on the management fee. So instead of charging 22%, you could charge 10%. For the first person that puts up that huge amount of money, like 20 million, 15 million, whatever that number is to get you up to that 15 million, is very important. And so don't give ownership of the company away. You must not do this, because what's happening at the big hedge funds, these traders, they're an employee, and when that happens, they don't improve their investment process, their trading strategy. So as you, the owner, you have the authority to do so. And of course, it's very important, because you're the trader, you're the face of the company, and the company would not exist without you. It's more lucrative for an investor to be a hedge fund client as opposed to having ownership with it. And secondly, you investors out there, you don't want to be associated with the ownership of a hedge fund, because what if it is Sam Bankman's fund, or someone like him, which he didn't know how to do anything. Apparently, this is what's happening. He was really ignorant, and those people that backed him, including the company called Skybridge Investments, that's a hedge fund, Anthony Scaramucci, and many other people backed him. And so that's why you don't want to have any type of ownership in the hedge fund, and allow that hedge fund manager to improve their investment selection process on whatever trades they're doing, their strategy, improving every aspect, and it's up to them to learn this. So you learn better when you have to go through the learning stages, as opposed to someone telling you how to do it. Now for a funds of funds manager, that 15 million to start becomes like 20 million. And so let's say that the hedge fund is generating returns of 10%. Okay, that's really low, but that's possible. It depends what type of market you're trading in, the conditions, etc., and the strategy that you're employing in your trading. Let's just say that you have an AUM of 10 million and you do 10%. 10% is exactly $1 million. So out of $1 million that you have created for your client, then you create an income of 20%. So that's 200,000 or 220,000, depends if you want to charge 20% or 22%. But of course, your first investor, it's going to be there. You're only going to do half, or let's say 10%. So you're only generating 100,000. And so that's why it's so difficult for a trader to start off in their own company, because of this issue. And this is why the $20 million minimum, $15 million minimum is more logical to start off. But how do you find that first investor? How do you get the fear and the risk out of these first investors? And that's what I want to focus on. Now we're going to get into the nitty-gritty, and I'm going to walk you through exactly how you get rid of that fear in investors that are afraid to invest in and become a client in a new hedge fund. Now, there's a lot of issues that happen, and the first issue is allowing them to get rid of that risk, that mental block that they have. And so how you're going to do this is you're going to find clients that have a income of, let's say, $1 billion, $100 million, or clients that are very, very rich. And so now that you understand what marketing, where you should be focusing on your marketing and how to find those clients, here's the message. They have money, because there's plenty of money in this world to start a hedge fund. And you have to say to yourself, well, how do you get the fear out? And this is where it is. You advise them to create a private foundation. Now, they could take up to 30% of their yearly income and dump it into that private foundation tax-free. And if you weren't there to advise them that, then they would have given this income to the IRS or to Uncle Sam, whatever you want to call it. And because of alleviating that fear that they would have basically given this money away to the government in taxation, then once they get rid of that fear, then it's a lot more logical for them to invest in your company, because basically it's free money for them, in a way. And so that's how you have to focus your marketing. You need to find very rich investors that basically have a great income, or that have a beautiful net worth, $1 billion or $500 million or even 100 million. If they have a net worth of 100 million, then they have a huge tax liability. And that's how to get an investor to become a client in your company very fast. It doesn't take long to create a private foundation. I've talked about this in a number of videos where to do that. You could do that in Liechtenstein and so forth. And so that's how to get rid of the risk associated with becoming a hedge fund investor. So for you, you're paying tax, number one. And if you don't create that private foundation, that money is going to be wasted in some place, because you can't hold on to it. And yes, as a big time investor, you could open up companies and you could do all these expenses for tax deductions. But at the end of the day, they really are expenses. Okay? So creating a charter company for the yacht, let's say you buy a $100 million yacht and you create a charter company, that's $10 million a year that's going to cost to run that yacht. You're not going to make that up in charter fees, I can tell you right now. So instead of spending $100 million on a yacht to make expenses, no, you take that $100 million and dump it into your private foundation, you reduced your tax liability by 30%, and the private foundation then can become the client of the hedge fund. All right, I want to talk about you could also tell your clients about a donor-advised fund. A donor-advised fund is the next tax deduction that they could receive. They could receive up to 100% of their income if they dump it into a donor-advised fund. And the donor-advised fund can also be the hedge fund client. So when you're raising capital, you need to explain to all these people how mentally get rid of that barrier. All right, the tax dollars was going to get dumped into expenses, whether it's a private jet or a private yacht or multiple companies that aren't doing what they should be doing, or even real estate investments that unfortunately apartment buildings aren't creating the 8% return anymore. And if you're a developer and you're creating all these expenses to continue developing property for that tax deduction, unfortunately, real estate market is not going to be there anymore for a long time. As long as interest rates stay high and the price of property continues to drop, which it will over the next 5 to 7 years, you are at a time period where really the only way to make money is through hedge fund investments. And so you, the investor, because I'm also talking to investors now, you need to get rid of that mental block. Okay, the taxes is going to go through the roof. In order to avoid that, you create your private foundation and you create your donor-advised fund. The donor-advised fund, there's a huge tax deduction with that. And with the private foundation, remember, you are allowed to pay for your children, your descendants, your relatives, your family with the money that that company generates. And I call it a company because it is a company. It's a legal entity. A trust is a waste of piece of paper in its agreement, and that agreement can be broken by a judge. And so that's why, as a person that is a trader, that's how you could convince your clients to become clients. Thank you so much for watching my video. Please remember to subscribe to my channel. It would really help me out because if you press that button, this helps me. You're going to get my videos anyway. They're going to be plastered on your computer monitor every time they come out. And then the other thing is thumbs up. You have to do thumbs up, please. Thank you so much. It's right there. Just press the button. And I really appreciate this. Thank you so much.